Well, welcome everyone. Thomas Montgomery here. We get together most weekday mornings at 8 o'clock Central, and we talk about topics related to getting funding to start or grow a small business. We're very fortunate to have received a grant last year in 2023. And one element of that grant is that we are expected to improve financial literacy nationwide. And so we do these Zooms often for our distribution partners, but increasingly going forward, we're going to be inviting the general public, if you will, individuals who own a small business or those that are considering owning a small business, and providing tips and strategies and success stories of how to qualify for funding. Because what you and I know is it doesn't matter how badly you want funding for your business or how badly you need it. It's, are you fundable? So today we're going to talk about a very interesting topic. Let me zoom in a bit so we can all see it and we'll scroll through it. We're going to talk about some tax incentive programs. Now, at first glance, you might say, oh, no, that's too good to be true. There's not free money out there, but actually there is. So there are different tax incentive programs. Many of them are geographic based for obvious reasons, because if they're using tax money to give to people, then of course they're wanting to have some sort of benefit from the geographic area that the taxes are pulled from. Kind of makes sense. So these are not, there's strings attached to each, and it's typically geographically based. So as we say here, Americans are often looking for free money to start or grow a business. One option that's getting more and more attention is leveraging tax-based funding. So tax-based funding incentives are quite common, although many people don't know about them. Let's look at several of them. So we'll look at 4 or 5, and we'll focus in on the Chapman Fund here in a moment. So there are some of them that are classified as worker relocation. I don't really like the title because you don't have to be a worker. In fact, many of them are trying to attract entrepreneurs, people that are going to be starting or growing businesses, creating jobs, and contributing to the tax base. One of which is Tulsa, Oklahoma. Now, again, we're not involved or related to these, so don't misunderstand. But what we do want to inform the audience today, that there are some tax-based funding programs available that are real, not make-believe, not too good to be true. So in Tulsa, and you can look any of these up, of course, there's what's called the Tulsa Remote. It's been around since 2018. It's designed to get people like you and I to move to Tulsa, Oklahoma. They will give you $10,000. Now that $10,000 can be used for moving expenses. It can be used for starting your business or for growing your business. But what do they want? They want you to move to Tulsa, Oklahoma. So that way you're buying groceries there, and you're buying clothes and gas. You're contributing to the economy. From what we've found so far, almost 3,000 people have been accepted and participated in the program. So pretty good number. They measure from their statistics that $307 million has been generated from that. So this is one example of a real program that you could use if you'd like, a tax incentive program to start or grow a business. 10,000, not a whole lot, but hey, it's free money. Let's move on because there are others. Then in West Virginia, now Tulsa, Oklahoma, of course, is a city and then a state. West Virginia's program is more a broader regional basis, not just a specific city. It is called Ascend West Virginia. They label it as a public-private initiative. They will give you $12,000 to start or grow a business or to move there, as well as other perks. And I thought this was really interesting as our team was researching. Not only will they give you 12,000, they'll also give you free passes for rock climbing, zip lining, and golf. So they're really focusing on getting entrepreneurs to move to West Virginia. And although we're often very busy as entrepreneurs, when you do have some free time, they want to make that free for you too. The statistic that we found on this is 42,500 applications. So that's a lot of people, frankly, quite a bit larger than the 2,900 from Tulsa. Maybe it's because it's a little bit more money for your business. Moving on. And then in Indiana, we found one, and I believe this is statewide. Could be mistaken, but I believe it's statewide. So here's for a city. Here's for some specific regions, which I know I wasn't very specific on. And then now we're for the full state, I believe, of Indiana. They call that the Make My Move. And so far, 340 entrepreneurs have taken advantage of that. Now we're up to 15,000. So 15,000 that you can use to start or grow a business. Plus, they'll give you some time with free golf courses and coffee with the mayor. So the mayors are very motivated to help individuals like you start and grow a business in Indiana. The last one of this category that we'll talk about is Topeka, Kansas. So it's back similar to the Tulsa discussion where it's for the tax is coming from a specific city versus the taxes being used from a region, or here the tax is being used from the entire state. Choose Topeka began in 2019, so about 5 years ago. Here they'll give you 15,000 to start or grow a business, and then they have some other incentives that they categorize as employer match funding. And our research shows about 6,000 people here. So here's several examples. So sometimes when we talk about the Chapman program, which I think is the best of the best, which we'll talk about, sometimes people say, "Oh, that's too good to be true. That can't be real." Well, it is real, right? There's lots of different programs. Well, I shouldn't say lots. There are numerous programs that just maybe you weren't aware of. So let's go down and talk now about programs that are specifically targeted at starting and growing businesses. So instead of focusing on coffee with the mayor, instead of focusing on giving you some golf or rock climbing, let's look at a program that's actually designed to provide you some free money, of course, but also provide the resources to create a fundable business so we can go qualify for a lot of money. So let's go through how that works. So first, let's introduce the Chapman Loan Program. The Chapman Loan Program began as a grant from the federal government. It's evolved over not only the years, over the decades. So it's been around a long time. It's been around longer than these other programs that we've talked about. So very credible, very stable. Here, the Chapman Loan Program, this money can be used for fixed assets, for new construction, for renovation, for leased property, for equipment, inventory, and working capital. So frankly, just about anything. I mean, that covers about the spectrum of what an entrepreneur might need money for, because working capital is kind of a catch-all. Now, there's a downside to the Chapman Fund, and this one gets people frustrated sometimes, but their maximum is 250,000, so $250,000. Actually, the range will go as low as 30. They won't do anything less than 30,000. The max is 250,000. So I know I've talked to many entrepreneurs, and they feel like that's just not enough for what they need for their business. But what we've been able to do is use this for the first tranche, the first round, and then add additional funding on top of it to get up into the millions. The additional funding could be SBA or non-SBA related, depending upon the client's mitigating circumstances. But for many entrepreneurs, not all, but for many entrepreneurs, 250,000 to get started is a pretty good starting point. And then, of course, we see that some people will form multiple businesses and then use this multiple times. So the way that we get businesses fundable is through what we call, and it's again grant subsidized, the business startup program. So let me give you a brief overview of that, and then we'll open it up for questions. As you form any questions, comments, or concerns, just go ahead and type it into the Q&A, the question and A box of Zoom. It's like a chat box, and we'll go through those in a moment. So the business startup program, again, from a grant that we received last year, is incredible. It's a turnkey resource, and its whole focus is creating fundable businesses. Because just as we started today's Zoom about, it does not matter how badly an entrepreneur wants money or needs money. Frankly, no one really cares. Is the business credible for funding? Is it fundable? A lot of times entrepreneurs don't know what that means. So if they don't know what it means, how do they accomplish that? So let's go through some of the attributes of the grant subsidized business startup program. First thing is 2,500 upfront, right up front, allocation to each participant in the startup program. Then we turn around and arrange immediate working capital. So this is right out of the gates. So it takes about 30 to 60 days normally to go through the 4 phases. And if you're not familiar with the 4 phases, there's a video on chapmanloanprogram.org about that. So while it takes normally 30 to 60 days to create a fundable business, the 2,500 is up front, and then we get offers for the participant immediately, working capital offers. We have almost 40 different lenders of all different types that have come together and that share this mission, this passion that we have. So the initial working capital, the amount will vary based upon client circumstances, typically 150,000 or less. So it's usually not everything that's needed, because we need to create a fundable business to be able to qualify for larger amounts. But at least we can get offers, and then participants can accept or reject those. What we also do through the grant subsidized business startup program is build the infrastructure of a fundable business. Now, you may have this already, which is fine, so we can skip the steps. But what does it take at the foundational level? We call this phase 1, by the way, to have a fundable business. Well, we need a good commercial address, a unique commercial address. And if the participant doesn't have that, we provide that through the grant for free. If they don't have an entity formed, we do that for free through the grant. And then, of course, we need to wrap it up by getting the EIN and the bank account. So this is what's needed, of course, as a foundation for any business to be really established, let alone fundable. And so any participants that have this, great, we can skip this step. But if not, it's included for free because of the grant. So this is really what we call phase 1. Then we move into building the credit worthiness of that business. So again, if you're bringing a business to the table, we'll focus on it. If we're forming one from scratch, then of course we need to create fundability, credit worthiness for it. What does this mean specifically? Well, we work with the participant. We make sure that, for instance, their Dun & Bradstreet profile, that they have a DUNS number, that the profile is optimized, and then we add primary trade lines. Because the only way to have business credit worthiness is to have trade lines. Now, again, if you bring these to the table already, we can skip this step. How many trade lines do we need? Well, for instance, with Dun & Bradstreet, one of the larger, or it is the largest business credit organizations, Dun & Bradstreet says to have a PAYDEX score, which is their grading of a business, you must have at least 3 payment experiences from at least 2 different vendors. So normally what we would do, especially for a new startup, is open 3 trade lines. You might say, well, what are trade lines? Trade lines are extensions of credit. They're primary, they're real, so they can be used. We can use company automobiles. We can either go get a company automobile, and we've had success stories and talked about that. We can take the owner's current vehicle and switch it over and make it a business trade line, business credit cards, and so forth. So regardless, we work with each participant to figure out what's best for them. We must have trade lines because those reflect payment experiences. Payment experiences show the world that our business pays its bills. Make sense? Then we get to what we call phase 3, and this is where we want to make sure that we have strong, solid financials. And you might say, well, that doesn't make sense, right? It's a new business. How could it have this? Well, that's what we build. That's what our grant does, is working with participants to have the strong business credit worthiness or the strong financials, including the balance sheet. There's a few things that we do with participants to accomplish that, but one of which, through the grant, is that we actually literally transfer $10,000 of assets over to each participant and put it on their balance sheet. So that creates what's called collateral, right? Because in many cases, you need collateral to get a loan. And then ultimately, it provides geographic access to the Chapman Fund, because the Chapman Fund is pulling from a taxing district, just like each of these, right? So if you want money from Tulsa remote, you need to have your business in Tulsa, or they're not going to give you any money, just the way it is. If you want money from Ascend, West Virginia, you've got to be in their geographic area. It makes sense, right, when it comes to tax money. So when we provide the address, we're providing an address in the geographic area of the Chapman Fund, which is awesome. We're ready to open it up for questions, comments, concerns. One thing to remember after the Zoom, if you were invited here by one of our distribution partners, like Jenny or Eric or Felicia, be sure to get back with the distribution partner that invited you so they can help you with next steps. If you found your way to us directly, again, welcome. And we have a simple 2-step process for those of you that came to us directly to be able to qualify and participate in the grant subsidized program. And you'll find that on our website here, chapmanloanprogram.org. And it's real clear. It says step 1 and step 2. All right, so with that being said, let's open it up for questions. Now, again, we don't work for Tulsa Remote or Ascend West Virginia or Make My Move, so it's not as if that I can provide you great detail on any of those. But certainly, if you are looking for money to start or grow a business, I can most likely answer your questions about the business startup program and the chapmanloanprogram.org website. So who has questions, comments, concerns on that? All right, Justin is asking what's the maximum amount of business funding? So that's a bit of a loaded question. So if you think about it objectively, the maximum amount that you can get is the maximum amount you qualify for, right? That kind of makes sense. So the more funding that you want or need for your business to start or grow is fine. It can be a really big number, but we need to be able to be fundable for that. So it comes back to these elements that we were talking about, making sure that we're strong enough to qualify. But yeah, that's fine. So I think what Justin's getting at is, can we go after a really large amount? Sure. It's just we need to qualify for it. So it just means that on paper. So when I say on paper, I don't want you to infer, oh, we're somehow doing something illegal or immoral. Not at all. It's just we need to be able to substantiate on paper that we're qualified for what we're trying to get. Hopefully that makes sense. All right, so Deshawn has the second question. She already has some trade lines, and that's great. So anything that you all bring to the table in most cases, will accelerate the process, right? So if you have 2 trade lines, we know we only need to have 3 payment experiences. Maybe you're already good enough. And I'll say this, and no snickering allowed. When it comes to trade lines, size matters. So the bigger the better, because you think about it. If you get away from the emotions of I want money or I need money, and you just step back and say, well, okay, what would it take for my business to look credible, to look fundable to the lender from their eyes? Well, certainly they would want to see that the business is set up correctly, right? It has a good commercial address, not a residential address, not a home, not a post office box, not one of those shared virtual addresses. It's a real commercial address. It's in good standing with the Secretary of State, it's good standing with the IRS, has a bank account. Now, on the bank account, one of the things that we can do is we have the Opportunity Fund, which isn't the focus today. You can see more information on Chapman, where we'll make daily deposits into the business bank account. But again, looking at from the eyes of the lender, so is the business set up credibly? Has it paid its bills in the past? In other words, does it have good business credit worthiness? And then does it have collateral? Does it have a strong balance sheet? So that's what we do. Anything that you bring, like Deshaun's bringing 2 trade lines, makes it even faster. So that's fine. It's really easy to get plugged in. It's not complicated at all. So again, get back with the referral partner that invited you. If that's the case, Larry's on the call. Mr. Johnson, I think, invited 23 people today. So again, if you're referred by Larry or other referral partners, get back with them. Otherwise, these are the direct instructions. All right, Marilyn's asking about the 10,000. So yeah, the 10,000 are real assets that we transfer over. We refer to those as quick cash. And so that provides some initial collateral on the balance sheet. The amount of collateral that a client will need will depend upon the amount of funding that they're seeking and what's called their use of funds, kind of their shopping list. But the 10,000 is at least to get them started. Her question, does it need to remain untouched? No. It can be liquidated, it can be used. You're welcome, Marilyn. All right, let's see. I see that Lori has a question. If you can go ahead and type it in, Lori. If there's any other questions, let us know. We want to keep this brief. Keep in mind, we get together most weekday mornings at this time. If you've registered once, you're registered permanently. You don't have to jump through more hoops. If somehow you're listening to this as a recording, not live, on chapmanloanprogram.org, you'll find a lot of resources, including a link to register for the daily Zooms. So we'll have different topics, and essentially why we have these daily Zooms is to have a 30-minute or less discussion to build financial literacy and answer your questions. So your questions are really important. So please ask the questions that you need to ask, because this is a very efficient way to do that. All right, Deshaun has the next question about timeline of funding, and that's a good question. So we've got to break that down, because there's multiple rounds of funding coming into your account when you go through the business startup program, not just one. So you'll get the grant allocation day one. We've already talked about that. We'll be able to get we call this first tranche. We'll be able to get you the funding offers typically within 24 hours of enrollment. And then, but her question was really, how soon does the money get into the account? Normally within a week or less. Then we need normally a 30 to 60 day process to build out a fundable business. During that time, we do transfer the 10,000. So there's another economic event. But then once we have a fundable business, what do? We go to funding. Keep for the larger amount. Keep in mind, if you go to chapmanloanprogram.org, in the first step of the 2 steps, there's a nice graphic. And I think that graphic does a really good job of describing what we'll be doing together and the value, the benefit you're getting each step of the way. Celino's asking about the address. So we provide the address for free. It's through the grant. We provide the filing with the Secretary of State for free. It's paid for by the grant. The EIN is free, of course, to the IRS. They don't charge for that. And then the bank account, of course, is just through whichever bank the participant prefers to work with. Now, might the bank have monthly account fees? They might. I mean, I can't control that. All right. Lori, type your questions. So great. So Lori is asking about the 2,500. Yeah, so the $2,500 grant allocation is upfront right off the bat. That's correct. All right, well, we'd love to have some individual conversations. Sometimes the questions that you have are more personal than what's suitable for a large group like today. So you can go to chapmanloanprogram.org, and there's a field right in the middle where you can provide us your contact information, and we can reach out and have a one-on-one. We can determine if you qualify for the business startup program. If that's something that you qualify for, you're welcome to participate in. There's not minimum credit scores. There's not minimum time in business. So we're not filtering in those regards. And if you're interested in any of the other programs like Tulsa Remote, Ascend, Make My Move, or Choose Topeka, you would just want to reach out to them individually. Our phone number and email address are, of course, also clearly located on the chapmanloanprogram.org website. Thank you all. You have a wonderful day, and we look forward to working with you. Bye-bye.